everyone, and welcome to this week's market update. We're going to talk about the key movers that affected the market last week and what are the imminent or the current movers, and highlight top economic events to come, and move to the MetaTrader 4 platform to check out some charts. So first, let's start with the key movers that affected the market last week. Mainly, we had still COVID-19 implications on the economic recovery, and we felt this last week, especially with the cases rising in the United Kingdom and the Eurozone, which triggered some concerns about the impact of this resurgence of the virus on the economic recovery, and whether central banks will be forced again to take any measures to support the economy, the economic recovery that is already slowing down a bit. So this was a concern last week, and we saw this its impact on the stock market during the first couple of days of the week. So however, there are some talks currently that the government are not considering a full or total lockdown like they did past in March and in April. So this is a bit of positive news to the market. Moving to the second key mover, which was Powell's testimony last week. He had a couple of testimonies about the COVID-19 impact on the U.S. economy and how the Federal Reserve responded to the impact, and how they tried to minimize its effect on the economy. So in most of his appearances, he insisted that the Federal Reserve, he affirmed that the Federal Reserve will remain supportive to the economy. They will do whatever they can, and for how long, for as long as it is needed to support the economy or to boost the economic recovery. But still, he also insisted that there should be some more work from the government. They should call also for fiscal stimulus, for additional fiscal stimulus, and this was clear, especially on Thursday. So this is from Powell's testimony. He had a little bit of an impact on the market, but still the key major for currencies was the fact that the European currencies were being affected with the resurgence that made the dollar more attractive to investors. Moving also to one of the key movers for the New Zealand dollar was the Reserve Bank of New Zealand monetary policy meeting, or monetary policy review. The bank left settings unchanged, with asset purchases of 100 billion Kiwi and interest rates at 0.25%, which is the historically low level, and insisted or also reiterated that the bank could be considering negative interest rates, or it's one of the tools that could be used in the future if needed to support the economic recovery. So this weighed a little bit on the New Zealand dollar, and we saw the New Zealand dollar weakening against other key currencies. The Swiss National Bank monetary policy meeting, also they kept the policy unchanged, and they affirmed also their interference in the FX market in order to find a proper range for the Swiss franc, while also confirming again that the Swiss franc remains highly overvalued relative to other counterparts. The weakening economic data, this is a bit of a signal line. It's just giving some flashes that the economic recovery around the world is slowing down a little bit. But however, for example, for the United States, it's still a bit better than what we're seeing in Europe, and this is also weighed on the euro-dollar direction for the past couple of weeks. So investors will currently be monitoring closely all the economic data, since we've seen sharp rebound in June, in July, but in August numbers were slightly higher. Also in September, a bit weaker. So this is just hinting that the economic recovery is not as strong as it started, and this could trigger some further or additional intervention from central banks or from governments, so fiscal or monetary stimulus, in order to boost it again and reach where the economic activity could reach back the pre-pandemic levels. So this is from for the economic data. The fiscal stimulus bill, the Democrats late last week, the Democrats, they tried to push for a new bill. It's around 2.4 billion. However, there were some talks that they could go for some compromise around 2 billion, 2.2 billion. But still, this is very high. We're very far from the level where Republicans, or the numbers that Republicans are looking for. They were looking for around 1 trillion in bill, or even less. So the possibilities or the prospects of reaching a deal, it's a bit low, but still everything can evolve until reaching the US presidential elections in early November. So this is for the fiscal stimulus bill. It gave some refresh for the market, but still, if we come to think about it in a more objective way, it's a bit far from being achieved. Situation in the eastern Mediterranean. Also, this is raising some concerns, especially with Turkey joining Azerbaijan against Armenia. And during late this week on Thursday, on the 1st and the 2nd of October, Thursday and Friday, the European leaders will be meeting to discuss these latest developments. So this also could weigh on risk sentiment in the market and could maybe drive some investors towards more safe assets. So these are the key movers that affected the market last week, and some that could also remain affecting the market for the coming week. Let's highlight some top of the key indicators or key economic events to take place. So on Tuesday, first it's a bit shy. We start with the consumer confidence from the Eurozone. No change expected at 13.9 in September, negative. Moving also to the German CPI, negative reading. This must be a concern for some European central bank officials. So definitely negative inflation figures since August. This must be alarming for the European Central Bank. Also from the United States, we have the consumer price index to come out. Expectations of a surge to 89.2 from 84.4 back in August. And we end the day with the weekly oil report by the American Petroleum Institute. On Wednesday, it's more busy. We start from China. We have the official manufacturing PMI, but also we have the private, which is expected to remain unchanged at 53.1, similar to the previous reading. Moving to the United Kingdom, the final reading of the second quarter GDP expectations of no change at minus 20.4, equal to the second reading, negative 20.4, contraction of 20.4% during the second quarter. Moving also to the Eurozone, German retail sales expectations of the rise by 0.4% from negative 0.9% in July. Also, the ECB President Christine Lagarde will be speaking tomorrow, so this could have an impact on the market if she comes to talk about the euro strength and the negative inflation and what the bank could be considering to support the economy from any headwinds. From the United States, the ADP non-farm employment change, which could give us some hints on the real numbers of the real payroll numbers that would be revealed on Friday. Expectations of 605,000 versus 428 back in July. Also from the United States, the final reading of the second quarter GDP contraction of 31.7%, similar to preliminary readings. And from Canada, the GDP month-to-month for July, expectations of an expansion by 3% versus 6.5 in June. So a bit of slowdown for the expansion, not as strong as the early months. Also from the United States, pending home sales expectations of rise by 3.2% in August. And we end the day with the crude oil inventories, the weekly oil report from US Energy Information Administration, and expectations of a drop in inventories by 2.325 million barrels. On Thursday, we have the final reading of the manufacturing PMI from the Eurozone, United Kingdom, and the United States. Also, no changes expected to the preliminary reading that we witnessed last week. The US initial jobs claims expectations of 150,000 versus 170,000. The core PCE price index is one of the key gauges for the Federal Reserve. Expectations of a reading of 0.3 and the ICM manufacturing PMI to come in at 56. So this is for Thursday. And for Friday, we start early from Australia with the retail sales contracting. Eurozone consumer price index, also this must be one of the very important events or economic releases this week, especially if we witness some more negativity in the reading or disappointment in the reading. So this could have an impact on the market. Moving to the United States, also the top release this week, the jobs data or jobs report from the United States. Average hourly earnings expected to rise by 0.2% in September versus 0.4% in August. Non-farm payrolls to show that the US economy created 850,000 jobs in September. Unemployment rate to dip to 8.2%, while factory orders for August expectations of 1.3% expansion versus 6.4%. This also confirms again how how the recovery or the economic activity is slowing down or has slowed down in August relative to July and June. And we end the week with the US Baker Hughes order count, which rose to 183 during the past week. So these are the top economic releases for the week. And now we're going to go to the MetaTrader 4 platform to talk about some key price formations. So first, we're going to start with the euro dollar, the usual. So if we just have a clear look on from bigger time frame, you can see that last week was catastrophic for the euro, especially after having 2 dodgy weeks. So we had 2 weeks ahead of last week's sell-off that were having mixed performance, but last week it was very tough for the euro holders, and the price has tumbled sharply. If we go closer to on the closer picture, we can see how we had series of losing days or consecutive losses on the days, and now today we're having a little bit of a rebound. If we just get a closer look, we can see what was the real formation behind this drop. You can see how the market was almost trading inside this channel. And this channel held here with this rounded bottom. So we had the first test and then another retest, and then we have almost a rounded bottom, and now the market is moving back higher. So if we just have to highlight some key levels, definitely we have to first look at 1685, which was key resistance when the market rebounded a little bit. So this is the first level. And then we have to highlight the previous support zones, which would turn out to be resistance levels near 7050. And then we have to look out for the top of the channel. These are the key levels on the upside, and on the downside, low near 16, and the previous low that we talked about previously, almost 15, 115, 115, 1490. So these are the key levels if you are trading the euro dollar against the United States dollar. So you have to keep in mind these levels. I'm just going to add some of the technical indicators to see what we can have. So if you can see here, we tested just on the daily chart, we tested the 100-day exponential moving average, also the RSI bounced from the 30 level, and now the price is getting closer to the middle band of the Bollinger Band, which is the 20-day simple moving average that sits at 1785 currently. So watch out how the price will react with the levels that we talked about. Moving to the British pound against the United States dollar, I'm going to remove these. Also, the pound was having tough days, however, found critical support near the previous key resistance levels. We can see here resistance, another resistance, same level, and this turned out to be a key support when the market reached it. We were trading almost for 3 days near the support of 2670, and then the market rebounded sharply today. If we just have a closer look on the hourly chart, we can see how the British pound against the US dollar was able to break above the key trend line, which could signal a bigger correction for the market. So you can see how here the price was reacting to the trend line 1, 2, and here also we stalled for a little before this break took place. We just have to draw some key levels. We definitely need to combine the previous two tops in order to look for some resistance level near the 2950 area ahead of the 130 psychological level. So these are the key levels on the upside if you're trading the British pound against the US dollar. And on the downside, definitely we have to keep in mind the previous low near 2765 and then 2670. So these are the key levels if you are trading the British pound against the United States dollar. I'm going to add the Bollinger Band. So you can see here how the prices were closing above the Bollinger Band due to the steep move to the upside. And the RSI was in the overbought territory and now dipped towards 70 following this slight correction. So we just need to, if you're just looking for some places to join this upward move when the correction finishes. So here currently we're at 23.6, almost between 23.6 and 38.2. So you can use the Fibonacci retracement tool in order to look for levels to join. For the British pound against the United States dollar, I'm going to move to the dollar against the Japanese yen. Despite all the changes that happened in Japan, we're still on the bigger picture. We're still trading inside a key bigger consolidation zone. So we have a key level, support level that almost held near 104 level, and also you can draw this trend line that combines previous stops in order to look for some breakout. Maybe if the price creates block above this trend line, so we can be targeting previous tops near 108 and definitely ahead near 107 level on 695. That was forming the previous consolidation zone. This was the previous consolidation zone where we've been trading for a while. So now we traded back below it, and then the market held the support, and now we're bouncing towards it. So watch out how the price will play. So on the upside, these are the key levels, and on the downside, we definitely have to highlight the 104 level, and we have some interim support or medium support, minor support near 105 level, which was almost close to what we've been trading near today at the lows. So this is for the dollar against the Japanese yen. If we just go for a smaller time frames, you can see also that there's this trend line. It's also being breached, and the market is trading. You can see how the market rebounded from the lower band of the Bollinger Band, and also the RSI was at 30. So we had a rebound towards the medium of the midline of the channel, which is a 20-day simple moving average. This gives some signals that the market could be indecisive for a couple of days. Moving the Australian dollar against the United States dollar. So for the last move, we had almost 61.8% retracement. So the market retraced 61% from the last rally. We had this upside rally, higher highs, and then we had a three-wave correction, 1, 2, and 3 to the downside, which held almost near 61.8. And currently, we're trading between the 61.8 and 50%. 50% retracement level. So you can highlight these levels here in order to set your trades, and also you can add for them the previous support that came in play, 71.90. And on the downside, definitely we have to go for 0.67. 0.6770 on the bigger picture, and on a closer look, 0.6920. So these are the key levels if you are trading the Australian dollar against the United States dollar. I'm going to highlight them again. And currently we're almost near the pivot line here, 70.60. So these are the levels, and on the upside, definitely you can highlight the previous stop. So these are the levels on the upside. I'm just going to add the indicators again. Also, the prices, we're trading between the 100 and 200-day exponential moving average, slightly below it. So definitely we have a bit of support here near the zone, and the RSI is moving back above the 30 level after the dipping below it. Moving the New Zealand dollar against the United States dollar. So we were trading inside a certain channel, and then the Reserve Bank of New Zealand came out talking about negative interest rates, and then the market moved. Here we have this double top formation, and the market moved below it. So if we just have to highlight the resistance zone, definitely the previous support should be turned to resistance near 66.05. So this could be the coming resistance, which is also coinciding with the previous stops that were also recorded here. So 0.6590, 0.66, definitely one of the key resistance levels. 67.15, and on the downside, this support, the previous support held near 65. So we have to have a look at it, and then we go for the previous low near 63.89, 85. So these are the key levels if you're trading the New Zealand dollar against the United States dollar. On the upside, on a bullish scenario, you have to look for 65.95 in terms of resistance and 67.15. And on the downside, 64.90 and 63.85. So if you just want to learn more about how the formations were formed, so you can see this double top formation here. It also took place with the certain divergence happening. So this is the double top, the M shape, and you can see here how the RSI was lower between the two tops. So here we have a divergence. The RSI was lower, while the price was almost equal to slightly higher on the second top. And this is how divergences work. And definitely we were able to break below the support, and the market retraced back here towards the support and then continued lower. So this is on a classic on how to do some classical technical analysis and add to it divergences for filtration. We're working currently near the 100-day exponential moving average, closer to the 200-day, which is also coinciding with the support zone that we talked about near almost 64.90 level. So this is all about the New Zealand dollar against the United States dollar. Moving to the Canadian, the USD CAD. So the market's currently trading near the 23.6. It's slightly, since we were able to break above the trend line. So we have to look for almost retracement. So you can see here how this trend line held for a while. We traded above it, and then had the retracement towards the trend line, and then the market moved up again. So if you just have to look clearly, or you better draw the Fibonacci retracement from the top level to the bottom, since you have to expect here a correction for the previous move that took place since March to August. So this move here, this was a bigger move, and then you could expect some correction, maybe a three wave correction towards a certain level. So in order to highlight these, you have to set definitely your targets or your levels that, based on how they will perform or how they will be how they will be traded, you can take your next decisions. So if you just have to highlight some levels on the USD CAD, you have to go for this previous support here that could be acting as resistance, or the market moves up towards 34.75. This is the first support, and also first resistance, and then you can head for the previous resistance or previous high, which is a bit far away from the market, which was almost around 37. It's almost around 320 pips away, or almost more, 340. So these are, on the bigger picture, these are the key points that you have to base your decisions on for the USD CAD. On the closer ones, you have to look for support near the 32.65, which was also acted here as a key resistance. The market had the reversal from this level, and then with the good volume, it was able to trade above it. So 32.65 ahead of a minor support, definitely 31.20, and then the lowest near 130 psychological level. So these are the key levels for the USD CAD pair. Here you can see how also the 100 and 200-day exponential moving average are also merged with the top band of the Bollinger Band. So this could be a key resistance area where the market could move in sideways for a while until we can build some volume to either have a bigger correction for this move, or have a move higher. So I'm just gonna go closer in order to have a closer look here at what's happening. You can see that the market is almost moving inside a certain channel, that you can always draw also these trend lines, the short-term trend lines, in order to draw some minor supports or minor resistances. So you can see how this trend line is holding. So watch out how this trend line would perform. So on the break of this trend line, we could retest this bottom or the bottom of the channel. For the USD CAD, moving to gold. Finally, gold was able to break below the consolidation zone that's held for a while. So we had a certain key level near 1900 that we talked about during the past webinar. The market was able to break below it, have a little bit of a push higher, and then move again towards its lowest levels. Currently, we're just like, investors are waiting for some further clarifications on where the market could be going. We had this trend line here that we have to monitor definitely if we want to look for a return and the recent move. So definitely we have to go back above 1945, which is almost $75 away. But the first level is almost 1900, so the first support zone that should be determined to be resistance 1900. So we should trade above 1900 in order to look back towards the trend line. At the top, we were able to have a lower low than this one, so this also could attract some buyers. If we just have a closer look on what's happening, or what happened during the day, so this support held here, and we were almost trading. So we had this formation down, lower lows, lower highs, but the lows were almost equal. But during the past hours, we were able to break above this trend line. So you have to definitely monitor again these key levels near 1900 and 1850. Okay, so this is for gold. So you have to monitor these key levels. We have definitely an interim support, an interim resistance near 1876, and after that we go for 1900 and the previous reversal that took place at 1920. So these are the key levels on the upside, and on the downside you better go for. I'm just gonna go for manually also pick these levels near 1820, which was the high before breaking out of this consolidation zone that took place here. And then we can highlight also 1789. So we have 3 supports and 3 resistances. So almost it is very clear that they had significant impact on the market or significant impact on investors' decision. So these are the levels that you better watch out for if you are looking to trade gold. So this is for gold. Moving to silver, on the bigger picture, silver, we have this formation here, the channel formation, and we're currently trading inside this channel. So exactly the bottom, 1, 2, 3, and then we plotted this bottom. And now we're moving to a little bit of a correction on the whole move to the downside. So you can set the Fibonacci retracement here and start looking for certain levels for reversals, but definitely you have to point 2580, which was one of the key resistance levels, key support levels, which could turn to be resistance, and 2364, and on the downside, the previous low near 2155. And after that, we can go to the beginning of the move, slightly below 20 near 1944. So these are the key levels for silver. Moving to oil. After the volatility that we witnessed for oil, currently we're trading inside the same range. If you just go for retracement, we're working near 61.8 for a couple of times, almost similar highs but higher lows on the smaller time frame. But still, we are inside a bigger congestion or a consolidation we're trading in. Also, you can go for this trend line, which could be key. And if you're looking for some breakouts, so market here is going for similar formation almost a triangle formation. It's not a perfect triangle, but still we have a series of lower lows and higher highs. So the market is consolidating inside a certain formation until further clarification in order to break out after the zone. So you have to look for the previous support 3880 ahead of 3657, and on the upside definitely you have to look for the previous stop also 4170 ahead of almost 4362. So these are the key levels where we're trading currently in the middle, so in between. So you can see here almost this trend line, so it has a lot of significance. Since when the market touched this trend line, we can see a little bit of a correction lower. So almost we're talking about almost 50-60 cents lower from the trend line. So also, if you can add technical indicators, you can see how we have a congestion, the 100, 200, H4 exponential moving average, the Bollinger Bands are closer here due to this consolidation. And definitely we're looking for some drivers for a breakout. Moving to the Dow Jones, which is having a very pretty rally today that started late last week. If you just have a look at the bigger picture, you can just, similar to what we've done with silver, you can just go for this formation, just draw these channels. So the market was almost exactly at the bottom of the channel. If we just go for also a cleaner, so you can see the significance of these lines. So we can see here the channel, how it held. We can see also that this channel coincided with the trend line that was combining the previous top for a while. So this definitely signaled that this is a key area for the Dow Jones, and we've bounced from these key levels. So currently, if we just go closer in order to set some key levels, we have to look for the retracement here, the trend line that's combining these previous top. We're currently trading, we're closing into this trend line. So watch out how the price would react with this trend line. You could either, it depends on how you're looking at the market. You could either look for a retracement here and then market move higher, or even you can look for some sideways trading and then the market will continue higher. So this depends on how you're looking for this trend and on how the market will react to this trend line. But definitely this could have something for traders. We just also have to highlight the key levels. So I have 28,352. 1.8 is also coinciding with the previous stop. So if we just go for 76.8 or 78.6 level, it's somewhere around this previous resistance near 28 level, and then we definitely go for the previous stop near 28,300. So these are the key levels on the upside, and on the downside, definitely you could go for some retracements of this recent rally when just it's a clear top. So you can go for the 38.2, which is almost coinciding with the previous supports here. Ahead of the previous low. So we have 26,530, 27,200, and on the upside, 28,000 and 28,372. So these are the key levels. Watch out how the price would react with this trend line. This trend line is combined by forming the previous stops. So watch out how the price will react to this trend line. So this is all for now. I'm just gonna add some indicators before I forget. So here, if we just add some indicators, you can see how the price is moving towards the upper band of the Bollinger Band. The RSI is in the overbought territory, but still, this doesn't mean that the market could have some more room to move higher ahead of the correction. So this is all for today. If you have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to sell or to buy any financial instrument. And ICM doesn't provide any investment advice. So if you have any questions, please write them down. Okay, perfect. I believe this is it for today. So if you just have any questions, you can write an email to webinar@icm.com or support@icm.com, and we'll be glad to help you. Have a good trading, and thank you for watching.